Welcome to Rehash, a Web3 podcast.
Hey everybody, welcome back to another episode of Rehash, a Web3 podcast. I'm your host, Diana Chen, and in this episode, we'll be talking all about investing in crypto regulation, different crypto trends we're seeing nowadays. And I've got Katherine Wu with me. She is a venture partner at Archetype and an advisor at the Crypto Council for Innovation. Welcome, Katherine. So happy to have you here.
Thank you so much. I am super honored to be voted on this. I really like the way you're booking your guests. And when I got tagged, I was like, oh my God, people want to hear my voice. So I don't know, very honored to be here.
Well, we should also say that Katherine was the number one voted person. She got the most votes out of anyone. So people definitely want you here. And I think it worked out so well. The lineup we have this season is mind blowing. I was like, wow, okay, everybody understood the assignment. This is pretty much exactly who I would have booked myself, but the DAO just did it for me. So anyway, congrats again. You deserve to be here. People want to hear you. So thank you for being here and agreeing to come on. Before we dive into investing in crypto and all the things that you have expertise in, can you just tell people who aren't familiar with you a little bit more about your background, what you were doing before crypto, and then how did you learn about crypto initially and get to where you are today?
Yeah, of course. And Diana, I know you know the story, so you're going to just have to hear me talk about it again. So I'm going to give the short story first and then, the long context after. So I spent the first 5 years of my career in the legal world, first at a law firm, and then I got my JD. So that was 3 years. I fell in love with crypto somewhere along my law school journey and became so obsessed. And, I crossed over to the dark side and joined crypto full time right after getting my JD as the first biz dev hire at Masari. So my first day, at work, was actually the last day when I handed in my final. And, eventually went on over to the investing VC side, which I've been doing now for almost 5 years. So altogether, a really, really fun decade, and definitely don't think I could have predicted, a decade ago where I would be today. And, looking back, it's pretty funny that the last 10 years of my life can be summed up in basically 2 sentences. I came into crypto during the first ICO craze, and what piqued my interest was, my niche area of law was in fund formation. And so it's basically advising hedge funds and private equity funds on fundraising the right way under securities law. So I knew a little bit more than the average person about securities law, the 40s Act, and all these little boxes you have to check to raise capital. So when ICOs came around, despite all the hype, what I saw beyond the noise was this crazy new efficient ways to raise capital, like internet native capital, in a matter of, 30 minutes, 30 days, whatever. And obviously that piqued my interest. And as you know, you find the relevant white papers, you fall into the rabbit hole, and you literally never come out of that.
Yeah, for sure. I love your background because I have a similar story. And the longer I'm in this space, the more ex-lawyers I meet. And I've gotten along great with everybody. I think it just takes a certain personality of somebody who used to be a lawyer, who didn't want to be a lawyer anymore, and was attracted to something like crypto. So that's super cool. So speaking of investing, you've spent pretty much your entire crypto career in investing. What do you love most about being a VC?
Okay, so first of all, I think it's important to say that I think being a VC or being in the investor seat is probably one of the most privileged positions to be in, right? And honestly, sometimes I have difficulty answering that question because it means you have to kind of square away this role of being a gatekeeper, and specifically a gatekeeper of capital. So, I've definitely, I think that question comes with both sides. So again, at the same time though, it's a job, right? And, we live in a capitalist society where you work to survive. So that's kind of how I've understood it, and also been able to perform without, dragging my whole self-worth and identity into it. But, coming back to your question, most obviously, being a super early stage VC just means you get to see trends from a really high level. So for examples, you see what areas really smart people are getting attracted to, right? To leave their current full-time jobs, whether it's, a lawyer or, in a big tech Web2 company, to come build full-time. And because that takes so much conviction, to leave what you're comfortable with, what to go literally, dedicate your career to, that for me is super high signal. So if we start to see different people kind of building in the same area, that kind of means that there's probably a gap in the industry, or maybe there's an opportunity that haven't fully been explored yet. Now, of course, In a bull market, sometimes that can be a false signal. So, for example, Axie had a really huge run in the last bull market, and it sprouted thousands of companies that legit were just kind of copy paste of the same business model with nothing really else new to it. So that's an example of, how sometimes bull markets can create false signals. And so as a VC or as an investor, when you're evaluating companies, sometimes it's also just about pattern recognition. And, you're a lawyer, so you probably understand like this a little bit more. And this is kind of maybe sometimes how that can come into play. So what other examples? Another example is building like X on Y layer one chain. So for example, the same model on Ethereum copied on Polkadot, copied on Solana. And I feel like if these aren't super net new, maybe these models can work on layer ones. But the fact is that, for new layer one to succeed, I think it needs more than just one breakout app. And personally, I would be excited to see something that's net new, either on, a layer one like Ethereum or on a net new layer one.
Yeah, looking back at some of your past investments, were there any that really surprised you? Like maybe at the time when they first approached you or you first heard about it, you were like, there's no way this can work. Like this is so dumb. And then it actually worked. And now, it's like, oh, okay, I guess I should have like looked more into that. Or maybe on the other side too, something that you were like, this is a pattern, everybody's doing this, like I'm recognizing the signal here, but then it just never really took off and it's kind of like dead now.
One of the biggest misses for me, and probably for a lot of actually New York specific VCs who are investing in crypto in the last few years, is probably OpenSea. Especially like I said, again, like I'm New York based, I'm Brooklyn based. It's actually really like, looking back, I'm like, how the hell did I not see this? But honestly, like when OpenSea first came around, NFTs were just crypto kitties and that was it. And I don't know, I think I was just like, oh, we're not ready for something fun on the blockchain yet. It's like serious building. And I probably just dismissed it. And so, one of the big lessons, honestly, I've learned as an investor in crypto specifically is that sometimes you just have to take things a little bit like not so serious. So for example, like I get asked from my like Web2 VC friends and they're like, oh, like, how do you do early stage investing in crypto? Like, it's so crazy. And I'm like, honestly, I've never thought I would think about this, but sometimes if it's like a consumer facing thing, you kind of have to think a little bit about the memeability, which is like a stupid metric because there's no metric for memeability, but sometimes that's what, users are drawn to specifically in the culture of Web3 or crypto. So everything is a little less serious and everything is, evolving as it goes. So that's definitely one really important thing I have to remind myself, which is, not everything has to be serious. Sometimes it could just be fun. And as an investor in crypto, you have to be flexible. You have to really listen and again, not take yourself too seriously.
Yeah, I can imagine that it almost helps to not overthink things as a VC and kind of just go with your gut a little bit, which I know sounds so unscientific and like bad advice, but that's kind of what it sounds like, is you kind of just have to go with your gut and don't think too hard about it.
VCs do
Or
think,
not.
actually, no, no, I'm kidding. No, it's just like pattern recognition, really, so, or, maybe some things that wouldn't have worked like 5 years ago would work today just because how much more infrastructure is there, right? Like, again, even 3-4 years ago, application layer stuff, I probably wouldn't even like consider, right? Whereas like now, like we're clearly shown that like I was wrong, so.
Yeah. So I know most of your investing journey has been in crypto, but like when you talk to your traditional investor friends, what do you see as some of the main differences between investing in crypto versus investing in like trad tech?
I think maybe number one is that you probably cannot take the same like metrics and sort of user numbers and stuff in the crypto world, right? So for example, like for a normal Web2 consumer fund, let's say, you look at an app, they're raising a seed and you're like, oh, like a few thousand users, this is a joke, right? You don't even consider that. But in crypto, you're like, oh my God, you have a couple thousand daily active users. That's pretty amazing. So obviously the market is new, but it doesn't mean it can't grow. So I think that's the one important thing, is that you can't discount something just because it doesn't immediately, have like thousands and hundreds of thousands of users. I think crypto is still crossing the chasm. It's still on the process of getting there. So maybe that's number one. Number two is, you probably know this too. I think there is a very specific culture in crypto, right? Which is that like, if you want to market to a crypto native audience, you kind of have to buy in the ethos a little bit, right? And I know like, everyone's so sick of decentralization, but It's true. I think crypto native audiences react well. I mean, I think that's probably why Rehash is structured as a DAO, right? Like you want to market to your crypto native audience, you want to have crypto native like guests on, and those are just some of the things they identify with. So marketing and the way you talk about your business, or even the way you want to think about go to market and distribution, is just fundamentally so different.
Yeah, I think those are two really good points. Another thing that I hear a lot in crypto and that I think VCs of all people are just the best at is this like DYOR, do your own research. Everybody says that whenever people are like, and I mean, this happens to me on the flip side now is some of my friends who aren't in crypto will hear about a new NFT project and they'll ask me, they'll like text me and be like, should I buy this? Should I buy this? And I'm like, I can't, I can't just tell you like yes or no. Like there's so much more involved and you need to do your own research and do your own due diligence. And I think like one big thing you've talked about so far is pattern recognition. But for the average individual who doesn't have all of these decks being sent to them all the time, and they maybe don't have as good of a view on the market as you do as a VC, what are some of the best ways that you think they can do their own research just as like an average individual?
Actually, what you said reminds me of like just like a funny anecdote. Like anyone who's been in crypto for like the last 4 or 5 years can relate to this. Like you probably went from the person that everyone wanted to like fight with at a party to like the person everyone wanted to like show their portfolio to at a party, and like no more fighting. So fully like relate to the DYOR thing. Look, like I have the same access to information as everyone else does, and I read the same white papers, I read the same blog posts, I probably read the same Substacks. It's possible to learn, it's possible to definitely get up to speed, but it does take time, it does take dedication. I will say, you know, learning crypto 5 years ago and learning crypto today probably requires a different approach. So, you know, for example, I think in the last, let's say 2 years, crypto has just grown to such a large industry, and there are like subcategories now. Like, you know, back maybe 5 years ago, you kind of like, you know, you read the Bitcoin white paper, you read the Ethereum white paper, and you just kind of like try to play around with different apps, and you probably get a good-ish sense. Now there's just like thousands of companies. There are, you know, subcategories like DeFi and NFTs and DAOs, and every subcategory requires its own literature. But every subcategory, I think, also has really good resources dedicating to it. So, you know, I start my day with podcasts, actually. So Unchained is really good for just like daily news. Your podcast is really great, actually, just like for just getting the lay of the land, trends of crypto, just talking about what's top of mind for people who are in it. I think it's really awesome. Jason Choi has a newsletter that I read. He's really great. He's been a longtime friend. And I think he's probably like one of my smartest friends on DeFi. So it kind of depends on your category. And when people come to me, they're like, hey, how should I get smart in crypto? I'm like, it's gotten big enough now where you can kind of identify your own interests. And the best way to do that is maybe tie it in with your own background, right? So if you came from finance, maybe DeFi is easier to grok for you. If you're from the creative field, like, yeah, again, NFTs or music NFTs is probably easier for you to kind of, you know, take your own background, apply to it, and maybe even have a new perspective on. So certainly as a VC, like my job is to see everything. It's certainly not possible to go like super deep, but you know, I try to really learn from founders because, again, they're the ones that gain the conviction to do this full time. And so that's really who I learn from.
Speaking of founders, one thing that I've been thinking about lately is sort of how founders of Web3 companies maybe should be perceived a little differently. And this is sort of like my hot take, and you tell me what you think as an actual investor. But what I think and what I've observed is that I think in Web3, you want to find a founder who actually doesn't have a very detailed roadmap and like plan for what they're going to do, and somebody who's more willing to let the community tell them, you know, what it is that they want, versus I think I've just seen some projects in Web3 where the founder has such a specific vision for what they want to build, and they're so married to that when the community tells them something else like that, maybe they don't like it, or they want some other features being built or to shift the product in a different direction, the founder is really unwilling to pivot because they came in with such a strong conviction for this like very specific vision.
I definitely hear what you're saying. You know what, this actually kind of ties back a little bit what you were asking earlier about Web 2 versus Web 3 investing. And there are some lessons that personally I think probably remains the same. So generally before you embark on, you know, starting a new company, you do user research. That's kind of how you can gauge how much people want what you're building, right? Also in traditional Web 2, generally speaking, and again, generalizing here, is pivotings are actually not seen as like a good sign because it kind of means, oh, you don't have conviction, or maybe you're like, conviction is like really held in high regard. What I usually ask about, and so, number one, do people actually want your product? And I do think that remains the same regardless. Like, I need to know that you've done your research. You can listen to your users. You can come to me and be like, okay, there's a problem. It's a real problem and I have a solution for it. You're not inventing a fake problem to, put a solution there. That's definitely important. I think something I ask also a lot about is really around go-to-market. So like, how are you going to go from idea to building a product to getting in front of users? I think that's a really, really important question to answer as well. So sure, I think Web3 founders all actually should be really good listeners, listen to what your users want, but that should come from the beginning. Like by the time you embark on your career to start a company, I'm hoping you've done your research, you've asked the right people, and you have a really good vision. Some of the things that I think are maybe left a little bit more up in the air sometimes is, everyone has an idea of like, okay, eventually I want to be a DAO. Eventually I want to decentralize. And I think the steps to getting there is still getting paved as we speak. And I think you see different approaches by different projects, and I think we're going to see that evolve. So that's maybe one of the things that I feel like is still getting experimented on. But if you come to me with an idea, I would hope that, you have an idea of exactly what you want to build, at least in the next, year or so.
Yeah, for sure. That actually just sparks another question in my head, which is, can you help me understand all of these VC investments into early stage Web3 companies that don't even have a product yet? Like it's literally just an idea and they're getting millions of dollars in funding. And not so much now that we're more in a bear market, but honestly, even now, like in a bear market, I still see it happening. But especially in a bull market, it's just ridiculous. Like from, a layperson's view, like ridiculous how much money these ideas, I can't even say companies because they're really just no more than an idea can really raise from these VCs.
Well, I mean, I can't tell if that's like a subtweet at me because that's literally my job. No, but listen, I hear you. You read these headlines, you're like, what the hell? Like, some people are like, what, I can do this? Or like, what, this is nothing new. Different investors have different theses of how they think the future will play out. Personally, for me, like, and also Archetype, by the way, like we don't have like a top down, this is what we think the future is, and we'll fund any idea that suits it. I think for us, because it's so early, and again, like we specialize investing in sometimes idea stage, it's really about the founding team and what they want to build. So for example, like if you want to build infrastructure around like ETH2, let's say, how are you qualified to do this? Do you have the relevant experiences? Can you actually build what you say you're going to build, right? In the first, like, let's say 6-ish months of a company, you're really trying to iterate on your MVP. And so what I need to know is, can you, with your current team, or maybe with the next 2 hires, get to the MVP? And so that sometimes requires relevant experience. I look a lot at team. I look at a lot of what they've done in the past. And you look at basically execution risk, right? Like, can you actually execute? And I think, sometimes when you just think about an idea, like, sure, anyone can have an idea. An idea is not the $1 million idea. The product is. So if you can build the products, you can probably fare at least okay, right? You can ship.
That makes sense. Yeah. It wasn't a subtweet at you. It's an honest question.
No, I'm just causing drama. I know.
I think going back to sort of your background in law and securities regulation and things, I think one of the hardest parts about investing in crypto is this question of regulation. I think right now there's just not a ton of regulatory guidance that we have on crypto. And so with a lot of companies and the way that they're trying to structure token drops or even their core business model, I think there can be a lot of questions of regulation that we don't even know the answer to. Like, it's not that, like, oh, they're taking a regulatory risk. It's like everyone is taking a regulatory risk if you're dabbling in this at all, because there's no guidance. So you don't know if regulations are going to come out and say this is okay, or say that this is not okay in like 2 years, and you get into some sort of legal trouble, or you have to shut down your business completely. And what you've been working on for the last few years is nothing has gone to waste. So when you look at these new companies to invest in, are there like certain red flags that you can identify from a regulatory perspective that can take you from a yes to a no? Or how do you like weigh that regulatory risk?
There's probably 2 main things I look at. One is team and the second is probably business model. So team, I mean, like, are there concerns for me about this particular person, right? Has, she or he engaged in bad practices in the past? And by the way, this becomes exponentially harder when you think about anonymous teams. So to date, we haven't actually invested in a fully, at least like not to us, anonymous teams, maybe to the public. So, because look, when you're at idea stage, that is so important. I think it's probably possible for anonymous teams to do really well, maybe even without taking VC money or without doxing themselves. But maybe for me, that's a risk that is really hard for me to assess, right? Especially at idea stage. And what I talked about earlier about, like, do you have good experience? Can I verify that? Do I know that you can build? Those are probably a little bit harder for me to take risk on. Sometimes it is tough when identities of anonymous teams come out, right? And I think that's happened in DeFi before. And so Frog Nation, actually, sorry, this is like such a funny term. So, when it came out that one of the founders was like the former co-founder of Quadriga, like that really did not play well with the community, right? And I know like that affected the prices, blah, blah, blah. Like I was not involved with that, but, reading that for me, I was like, oh, wow, like, this is probably another data point as to why I think it's pretty important to know who you're investing in. And that's from my perspective. So that's on the number one founder side. Number two, on the business model side. So I think there's a couple of things, right? Like so far, at least in the US, regulation has been shaped by enforcement actions. And generally speaking, I feel like enforcement actions go after kind of the lowest hanging fruit, which is like you really have to do something super egregious. Because there's no clear regulation or guidance as to how your best practices should be, you kind of just avoid being the lowest hanging fruit. And I know that's a low bar, but that's just kind of the state of today's regulation and how founders want to navigate it. So for me, I'm like, okay, is your business model sustainable? Are you committed to building? Is this something that I think you are going to carry through to execution and not just like, dump on your token holders or whatever? Like, do you have a sustainable plan for it? Are you, again, like I said, like aligned with the ethos? Are you in it for the passion and you understand the culture of Web3? I think those are all really important things to kind of like know, who knows what regulations are going to come out. And I think that's just a risk that we all have to take because, like I said, I think especially in the US, it's just been a little bit frustrating for the past few years.
For sure. Do you see regulation as a deterrent to innovation and growth, or do you see it as a necessary part of it?
I think crypto probably will continue in spite of regulation or lack of guidance. And this is probably something that I would not have agreed with just a few years ago, but what are you going to do? What are you going to shut down? You're going to shut down the blockchain. How are you going to do that? Right. And look, I don't want to come off super unsympathetic because I do think that in conversations with DC and lawmakers, I do think there's a lack of nuance, right? Like basically both sides just comes really convinced on their own perspectives. And I think that's tough to have a nuanced conversation. So I certainly understand, look, from a lawmaker's perspective, you're dealing with so many issues, right? And so when it comes to crypto and understanding the nuances of crypto, that's a huge learning curve. And unless you dedicate, full time to learning it, it's really hard. And so do I wish there's like better productive conversations on both sides? Yes. But at the same time, I think that's what we're kind of getting to, and you see organizations like CCI, which I'm part of, really wanting to engage with lawmakers, really doing these roundtables, these educational sessions. I think that's really important. I think all understanding comes with education.
Yeah. Why do you think, from your perspective, that regulators are so like they haven't done anything and we have such a lack of regulation? Do you think it's because it's the whole like you're afraid of what you don't know type of thing and they're just not educated like you were just talking about? Or do you think it's more like they're in cahoots with the big banks and the rich politicians and things like that? Like what do you think is just preventing them from doing something?
I mean, I don't know that I have some like tinfoil hat like theory on why, but you know what? I'm going to bring it down to an easy example. Sometimes when you say the wrong things and you like kind of like rub the crypto community the wrong way, it is a lot to handle. Like people flood your mentions, they call you all kind of names or harassing you in DMs. You've probably faced it. I've certainly faced it. That is not pleasant, right? And I think if you look at actually like some of the things that have come out, like from either state legislatures or just like things that people say, like policymakers say, if it's just like one word that's off, the entire community gets mad about it, right? And so I think it's almost a little bit scary to like know what to do the right thing, like know what the right thing is. The other thing with like at least a US regime that's really weird is like, the chairman of the SEC, for example, changes. And I think that's good, but it's so much up to the individual to like set the agenda, right? So like everyone's like, oh, like every time the SEC chairman Gary Gensler says something, I feel like he's like undoing all the work. And he probably he probably takes a little bit of a harder stance on crypto, and his words have certainly been a little bit harsh. And so I think at this point, people are a little bit just like, whatever, what are you going to do? You can't shut down the blockchain. So I'm just going to keep what I'm going to do. Like, you can't shut down the internet. You can't shut down my project, whatever. I'll move somewhere else. So there are ways around it. It's not a fun situation though.
Yeah. So for people who still want to innovate and they're going to do it anyway, what tips do you have for them to like safely innovate? Because you still don't want to be reckless with it, like just because you're like, oh, what are they going to do? Shut down the blockchain. But you still want to like be as careful as you can while still doing the things that you want to do. So what tips do you have for people who want to innovate and do like Web3 native things, but it could touch a tricky regulation area?
I mean, I think a lot of that comes down to, again, I hate saying this because it's so oversaid, but decentralization. Like, are you truly committed to the vision, to the plan? People love to say, smart contracts and code, and sure, they all live on. That's probably also why projects are open source. I mean, just like, can you demonstrate that you want to build to the ethos, right? And I think the reason why, at least from like a regulatory risk standpoint, people like kind of like crowd around that is probably because I don't know if you remember, but like in 2018 or 2019, the head of corporate finance at the SEC like gave this speech about how Ethereum was kind of decentralized enough to like maybe not be a security. I don't know if you remember this. You kind of have to be in the weeds to like have followed it anyway. But that was basically like a huge speech because that's kind of the first time anyone's even like mentioned the words decentralization. Like he specifically cited Ethereum. And so a lot of people are like, you know what, like if you can't pinpoint, like here are the few like control users. And like if I arrest these people, if they, or if they're taking out the equation, the whole project is shut down, then that's probably too centralized. And that's like maybe poses some centralized risk. So I don't know that it's like necessarily for regulatory reasons that everyone wants to like go the decentralization route. I certainly think that's also part of the ethos, but it just so happened to, I think, lines up a little bit with like alleviating risk, at least in the US.
Yeah, that makes a lot of sense. So looking ahead to the future, I want to get some of your thoughts on the future of crypto and especially with this bear market that we're in now. First, I guess to start, like how long do you see this bear market lasting?
I hate to answer that because I don't know. Like, I don't have more information than you do. I have no idea.
Best guess. Come on, Catherine.
People,
you know how much people love to speculate and hear other people speculate, so they can go and yell at
okay, I think the lawyer in me that's like, oh, you can't make like reckless, like forward-looking statements. I don't know. I have no idea. It could be 2 months. It could be 2 years. Who knows?
Okay, so ideally with this bear market, no matter like regardless how long it lasts, what would you like to see happen during this bear market with regards to like building and growing and continuing to develop this ecosystem?
Well, okay. The only data point I really have is kind of the last bear market that I lived through. And I remember in the last bear market, a lot of people turned towards like building infrastructure. And I think that's probably a good thing. When it's a bull market and money seems easy, you can kind of just launch like a, half-baked idea and seem to be fine. I think it's a little bit harder to get away with that in a bear market. And so people probably turn more into like building like real infrastructure and solving the real hard problems. So if the last bear market is any indication, we'll probably see more people turn into kind of like harder to solve infrastructure questions. There's probably going to be a lot of stuff around, like I said earlier, ETH2. You can probably see more innovations around DeFi. I think there's going to be probably some new thing that comes out for the next bull market. So we'll see.
What do you think are some of the more consumer-facing trends that we'll see during this bear market or, just in the next like year or so?
I think one of the things that might be interesting that I haven't really seen take off yet is Web3 social. And I don't know what that looks like, by the way, but I think that's probably something that could be interesting. Like people talk about decentralized Twitter. Who knows? I haven't seen a good solve for that yet, but I think we're probably not far.
I don't know if you've been following Lens, but do you think that's a promising solution?
I mean, Lens just launched, right? So I think, I'm actually talking to someone who's building on Lens later today. So, again, bear markets attract people with real conviction who want to build for the long term. So I think it's actually, from my seat, it's a little bit less noise. And so I certainly benefit. But look, nobody likes a bear market. Okay. Like none of us do. Like anyone who's been in crypto, like my net worth is probably 90% in crypto. Like that sucks. I hate it. So I don't want to be like totally unsympathetic. But at the same time, it kind of drowns out some of the hype sometimes. And that's not a terrible thing.
Okay, and then last question. If crypto were to completely cease to exist in 5 years, why would that be?
Oof. 5 years ago, it probably was possible that it would cease to exist. I don't actually think at this point it's like I worry about that anymore. Like between Thanksgiving and Christmas of like 2018 when ETH was at like $70-ish and it was just like going way down, I was real scared for a second. I was like, oh my God, I made a huge mistake. Maybe I should go take the bar again. Honestly, at this point, I feel like we have enough buy-in just from like users, from builders, from investors that I kind of just think it's here to stay. So I will challenge the hypothetical.
Okay, come on, Catherine, play along with the hypothetical. I don't believe this is going to happen either. I think crypto is here to stay. I like feel very confident about that. But for all the naysayers out there, and there are a lot of them, if crypto were to cease to exist, like what in your mind would be like the one thing that could bring crypto down?
Like people just stop caring about it and people just stop using it. People stop holding those assets, right? I don't know what it will take for everyone in the world to let go of their crypto assets and for every build in the world to just like stop working on it. I have no idea. It's one of those like crazy hypotheticals. It'll have to take like an apocalypse basically for it to happen. So now, is it possible for an apocalypse to happen in 5 years? That I don't know.
Zombie apocalypse incoming.
Zombie invasions. That'll be my answer. Zombie invasions.
Okay, I love it. All right. Well, on that light note, I like to also end every podcast episode with a quick little game called This or That. So I'm going to give you 2 words, A or B, and you just tell me which one you prefer. No explanation needed, just a quick lightning round. And I have 10 pairs of words for you. Are you ready?
Oh, okay. I love context, so this is really hard for me. I'm half ready.
Maybe I'll give
along.
you. Okay. Play along. Play along, Catherine. Come on. All right. First one, Bitcoin or Ethereum?
That's what you're going to start with? You're really like trying to cancel people on here.
Okay. Nobody else has had this hard of a time with the first one. We play this with every guest. Everyone else has done it, Catherine. You can do it.
Okay. I'm going to say Ethereum.
Okay. Crypto or Web3?
Crypto.
DeFi or NFTs?
Oh my God. NFTs. I hate this.
I think this game is probably harder for lawyers because lawyers always want to say it depends and like walk that.
Literally, I'm like suppressing the urge to say that.
This is binary.
I'm like physically in pain.
Okay, I believe in you. Next one, bear market or bull market?
Bull market.
You would be surprised how many people say bear market.
I know, but like for the bags, right?
Yeah.
Our collective bags. Our collective bags. It's good for everyone.
Wag me. Yeah. You're just looking out for all your friends.
Exactly.
Okay, next one. Building or investing?
As an investor, I would love to build, so I would say building.
Oh, okay. Books or podcasts?
Books.
North America or Asia?
Asia, all day. What? I don't even know what context that is. I'm like, that's my homeland. I got to say that.
I know, but you live in New York now, and you have for a long time.
True.
I don't know.
True.
Okay, next one. Beach or mountains?
Oh, beach.
Appetizers or dessert?
Oh, wow. Given that I'm in my 30s now, I probably can't do desserts all day. I'm going to say appetizers.
Okay. Last one. We're going to get through this game. Past or future?
Past or future? As a Cancer, I tend to be I'm like very nostalgic always. I'm going to brainlet on my astrology and just say past.
Okay, that might have been the longest lightning round of this game.
I'm so sorry.
But I hope it was entertaining for people. It was very entertaining for me. You did it. You should be proud of yourself. Give yourself a pat on the back. You did it.
Next time, our whole podcast should just be lightning rounds and see how long I can stretch it.
Okay, we'll get through like 2 games in an hour, probably.
Perfect.
Okay, before you go,
I think our DAO members should write a proposal if they want this.
Oh my God, yeah. Spin up a new podcast under Rehash that's just like lightning round games.
Like lightning rounds with me.
Yeah, just with Katherine.
Please don't do that.
All right, last thing, Katherine, before you go, tell people where they can find you if they want to follow you personally, and then where they can go to learn more about the stuff that you're working on. Go ahead and plug anything else you'd like.
You can probably find me on Twitter at Katherine Wu on Twitter. Check out the good work that CCI is doing in trying to make regulations just a little bit more hospitable to crypto innovators. Check out what we're investing in at Archetype. I'm biased, but I personally think we invest in the best crypto companies. And so check that out. I'm also, this is like the first time I'm going to say this live, but I'm launching a podcast series. And it will come out hopefully sometime in the next month if I can get my stuff together.
I believe in you. You can do it. I'm super hyped. Did you decide on a name?
I did. Oh my God. I remember we were talking about this.
Yeah.
Okay. I'm going to tell you, and I haven't told anyone the name yet.
Wait, am I allowed to air this or do I need to cut it out?
You can air this.
Okay.
I think.
Cool.
I don't know. I'm not ready to announce it actually, but I'm just going to say it so I can hold myself accountable.
Okay.
I decided on cross-chain examination.
Cross-chain exam. That's perfect for you.
Right. Because So I was actually watching the Amber Heard Johnny Depp trial, and she was doing like cross-examination. I was like, oh my God, cross. And I was thinking about cross-chain a lot lately. I'm like, cross-chain examination. That's so nerdy and so me.
I love that. What were the other ones we were throwing around?
Oh my God, you want to hear it? Life in the fast chain. No pain, no gain. No chain, no gain.
No chain, no gain.
They were terrible.
I think that's the one I liked. I was like, no chain, no gain. Do that.
It's catchy. It's for sure catchy, but it's like not nerdy enough. So I landed on cross-chain
memeable.
examination.
It's like you were saying.
It is memeable.
It just has to be memeable. That's how you know it's a good investment. It's memeable.
That's true. Well, no one's trying to invest in my podcast. This is purely a money loss, so we're good. Not investable, okay. Just purely nerdy.
All right, well, stay tuned for cross-chain examination with Katherine Wu. I'm super hyped for that. And go follow her on Twitter so you don't miss the big drop, and make sure you keep her accountable. Also encourage her to shitpost more because she really wants to, but she thinks she has this persona. So now that you've seen some of her personality, encourage her to let it shine more on the Twitterverse. Thank you so much, Katherine, for coming on the podcast. Thank you, everybody who voted her on. Thank you, listeners, for tuning in. And we will be back again soon with another episode of Rehash.
Thank you for tuning in to this episode of Rehash, a Web3 podcast. The guest from this episode, Katherine Wu, was nominated by Diana Chen and voted onto the podcast by Tim, Caitlin, Bezod, Triumph, Tyler Internet, and Diana Chen. Some of the questions you heard were submitted by Carsten. Rehash is hosted by Diana Chen, produced and edited by Ellie Dots and Tyler Internet, and as always, supported by Rehash DAO. To stay up to date on all things Rehash, you can follow us on Twitter at RehashWeb3 and join our Discord to get involved.